come and look at a chart that I'm showing here inside my terminal just quickly. You see Apple at $300 a share today, pulling back just to $297. At $297, $300 a share. Overvalued, overextended, or breaking out into a new trading range?
Yeah, breaking out into a new trading range. I think it's really been a two-part thesis for us over the last few years. I think the first part you saw this year, and obviously stocks had a massive move, but it is a 5G super cycle that we're going into. And when you look at the install base, 900 million iPhones worldwide, and where penetration is, I think about a third of those are going to upgrade over the next few years. That remains a core 5G play, and I think a re-rating now is continuing to happen on Apple, and I think many are starting to now come around.
So Dan, if you come and take a look at another chart inside my terminal, I know my producers kill me every time I do this. Your price target now, you're leading the way at 350. We got two of those price target raises today to 330. But after an 86% run up in 2019, how much of the good news is already baked into the share price, in your opinion?
I think only half of it. I mean, I could tell you from talking to institutional investors on a daily basis, it's still underowned by many in terms of not believing in the 5G super cycle and really the install base sort of upgrade cycle in terms of what's happening. And I think for a company that's historically traded 12 to 16 times, now breaking out in terms of where it's trading, there's still a lot of haters out there. And I think that's what I like to see. You don't want to see everyone loving this. And I think they're going to continue to prove Cook and Cupertino over the coming quarters, not just iPhone's Rock of Gibraltar, but what they're doing on services. And I think that's really the 1-2 punch to where you get to 350 or north of that as we go into next year.
What if 5G doesn't pan out? What is your estimate for that left side, downside, tail risk event?
Yeah, and I think that if you said a bear case, outside of exogenous events, it's okay, what happens if 5G is a dud? And I think to that point, if you look what's baked into numbers right now, it's called 200 million units is lying in the sand. You know, upside potentially could be 220, 225. So I think what's really being baked in here is not an overly bullish number in terms of the street. And that's what I love about the setup. And if it's a dud and you see some disappointments, and you'll definitely see some sort of speed bumps, which I view as creating opportunities in the stock. It's a two-part 5G cycle. There's a 2020, 2021. So I don't view this as just a 6 to 9 month cycle. I view it as really a 12 to 18 month.
You said that the 1-2 punch is not only 5G, but then services. So much of the frustrations over this company is the cyclicality because they get more than half of their revenue still from the iPhone. What % of revenue do you want to see from services to reduce that cyclicality and become a more stable stock?
Yeah, I think for now, and really for the foreseeable future, iPhone's going to continue to be the core part of Apple. We don't see that changing. But what I would say on the services piece, now north of 50 billion. You go into next year north of 60 billion. And in the valuation, what I love about it is that services valuation, I think, is 500 to 600 billion. So you're starting to see more recurring revenue there. And I think that combo is also being re-rated by the street. And that's sort of what I love about the way this is playing out.